Okay, we're live a few seconds early. Hello, Rick. It's nice to have you successfully in the chat tonight. And this is, it's not quite 7 o'clock yet, but this is still the Anderson Report. This is my YouTube channel, The Anderson Report. I am Tim the Source Anderson. And my YouTube channel is The Anderson Report, of course. I'm also on Periscope at TJ Anderson 12. And my Twitter handle is TJ Anderson 1. Hi, Pablo. Um, and hi, Jen. And I think most people that are watching right now have subscribed to the channel. If you haven't, hit the subscribe button on YouTube. If you want notifications of when the next broadcast will be, hit the little bell right next to the subscribe button. And you will get notifications, most likely through email, unless you designate otherwise, as to when the next broadcast will be. Typically, I have them at 7 p.m. I occasionally have them once in a while at a different time, depending on certain events. I'm toying around with the idea of doing something maybe like a 20 to 30 minute late morning show on occasion during market hours if there's significant economic data and or market activity to talk about. I'll have more updates on that going forward. So I really want to thank everyone for their support, and we will take a look at the market action today. It was quite a strong day right out of the gates this morning. Markets opened higher. They were a little bit higher around the globe. Um, Markets in Japan were up. Markets in the UK were up. Pretty much positive. And really no carryover selling in either Asia or Europe from the little spate of selling that we had during the last 2 hours of the day on Tuesday. So, what we had then during the day was stocks just pretty much kept their gains, built on their gains, worked their way higher most of the day. The S&P 500 really teased us with new all-time highs, getting slightly above that 3386 level between 3 and 330, pulled back a bit, closed a little bit lower than there, but the S&P 500 gained a little over 1.4%, closed at 33, just over 3380, literally 6 points from what would be a new all-time high. So, in terms of the other market averages, the Dow had a very strong day. It was up over between 250 and 300 points for a good chunk of the day. Flirted with trading above 28,000, was above that level a little bit maybe during the last hour and a half of trading on and off. Settled slightly lower than that, 27,976, up just over 1% on the day, a 290 point gain. And look, the Dow has outperformed both the S&P and the Nasdaq over the last 4 or 5 days. In fact, over the last 5 days, the Dow has gained a total of 2.8%. That compares with the S&P gaining 1.6%. Now, the Nasdaq broke its 3-day losing streak today. It had been down, but not severely for the last 3 days. It had a strong day today. It was up, as I mentioned, right out of the gates, built on those gains most of the day, finished with just over a 2% gain, closed above 11,000. Not a new closing high, but a very positive day for the Nasdaq, up, closing just over 11,000 at 11,012. Um, as I mentioned, the Nasdaq has been pulling back for the last few days. It's had a 3-day losing streak. So over the last 5 days, it's up just barely positive with a net gain of 0.15%. Okay. Now, I will just say that there were a couple of things about the market that I was not crazy about today. Um, Look, the averages look great. S&P very close to an all-time high. The Dow, scratching at 28,000. Nobody's going to argue with that. But the breadth, considering that we had a 1% gain on the Dow, a 1.5% gain on the S&P, over a 2% gain on NASDAQ, the breadth of the market could have been a little bit better. Hi, Maddie and John. Thank you for joining us this evening. Lots of people in the chat today. I like that. And the Russell 2000 was up a point earlier, up a 1% earlier in the day, right at that 1600 level, which was kind of its high yesterday, then sold off. Then at one point was down all the way from up 1% basically to even, recovered late in the day, up 0.5%. And I've mentioned the Dow Jones Transportation Average a little bit the last few days. I didn't mention it the first couple weeks of the show because I think the average had been very skewed by a very, very weak airline sector that's been weak probably for all the right reasons. Excuse me. And I didn't think it was a very good barometer, but it has been lately. It's very strong. It's outperformed the Dow and even the Russell 2000. It went from it got through that 10,000 level at the beginning of the month. It's been kind of up in a straight line since then. It did touch 11,000 today. But the Dow Jones Transportation Average finished with a gain of 45 points, 10,936. Okay, so it's a big round number average. It was up 0.4%, but earlier in the day it was 150 points higher than where it closed. So I'll be very interested to see how the transports act tomorrow. All of the gains in the transports today had to come from Federal Express, UPS, and the rail stocks. I didn't look at exactly what FedEx and UPS did. They've been very, very strong for the last 4 or 5 days. But the airlines were all down today. We mentioned them earlier in the week. I still think they're okay, but they have a lot of work to do to get their load levels back to where they are comfortably in profitable territory. Hi, Pablo. Okay, so a little bit concerned about the transports trading well off their highs. A little bit concerned about the Russell. It went out at 1583. It gained 0.5%. It had been up as much as 1%. Where the Dow, the S&P, and the Nasdaq pretty much closed very close to their highs of the day, the transports and the Russell did not. So I'm not gonna get overly freaked out over it. It's just something that needs to be watched very closely. Now, some of that is that the transports have had just a ridiculously strong move. They're up 7% over the last 5 days. The Russell is up 2.4% over the last 5 days. So I think the Russell actually was up, it was down yesterday. It was, I think it was having even stronger gains earlier in the week, and last week I've highlighted it a couple of times. Now, the breadth of the market, or mainly the advanced decline line, was positive with 3 issues advancing for every 2 declining. So you had about 1,800 gainers, 1,200 losers. As I mentioned a couple minutes ago, for the major market averages, Dow, S&P, Nasdaq, to be up between 1% and 2%, I would almost think that number should be a lot higher. And on the Nasdaq whole universe, you had 4 stocks advancing for every 3 that were declining. For a Nasdaq index that's up 2%, 230 points, that advanced decline on the Nasdaq should be a little bit stronger than that. Now, it could work itself out tomorrow. If we have a strong day, those advanced decline numbers could improve. One little negative data point after the close, Cisco, which is not the dominant stock in the tech sector that it was 15, 20 years ago, but still a highly followed stock. They reported earnings, their revenues were down. The revenues and earnings, whether or not they missed by a little bit, I think the significant thing about Cisco's earnings was that they guided significantly lower for next quarter. And the stock was down 3 to 5% in after hours trading, symbol CSCO. We will just have to see how that reacts tomorrow. It's not going to completely dominate the tech tape like it would have 15 years ago, but it's still an important company. Another note on the market breadth, we had 88 new highs on the New York Stock Exchange. We had 101 new highs on NASDAQ. There's nothing wrong with that. Those are solid numbers. Those numbers had been a little bit higher earlier in the week. Okay, so some of the stocks that made new highs earlier in the week aren't necessarily following through and making new highs day after day. That means some of them might just be a little extended. They might be taking a little bit of a breather. They could be making new highs later next week. But it's not like the new high list is just smoking every day. So we'll watch that. In addition to the breadth, we'll watch a little bit going forward. Now, that being said, I mean, the sectors, look, this was a broad rally. If you look at the sector performance of the S&P 500 sectors, a lot of sectors with better than 1% gains. Information technology up 2.3%. Healthcare up 1.8%. Consumer discretionary, that's things that you want to buy, not just that you need to buy, up 1.7%. Consumer staples, those are these things you need to buy, like food and toothpaste and basic essentials. Consumer staples up 1.3%. Communication services up 1.2%. So you had this after a 3-day sell-off in Nasdaq. You definitely had some people coming back in to the big. Yes, Greg, you had people coming back into the big mega growth tech leaders. You all know the names. You had info technology up over 2%. You had communication services up over 1%. And you had real estate and utilities up a little bit. You had more comments on schools opening in the fall. I think that's potentially a positive. You still have the industrials and some of the material stocks, although I didn't mention them in this sector rundown, are still acting well as a sign that there's, you look clearly over the last 3 or 4 days, because there's been a little bit of asset allocation going on and some sector rotation out of the big mega cap growth stocks that were just probably a little bit ahead of themselves, and really the stocks that have been the big beneficiaries of the COVID shutdown trade, or the stay at home, and driving the internet traffic trade, as I like to say, into the economic cyclical stocks. Like, where do we want a little bit more exposure if the economy is really going to get in gear? So that's been a positive sign, that even though some of the economic data, mainly employment, has been slow to get to that new level, investors are convinced that it's coming. Financials had been very strong for the last 3 days. They pulled back a little bit. They are not really a growth sector right now. Now, look, if the economy really starts to get back in gear, they'll have some more positive activity. They had a nice run with yields getting a little bit higher over the last 3 or 4 days. They were down 0.3% today. Certainly not a severe pullback, but they'd had pretty good gains for 3 or 4 days. One other piece of, because we mentioned the college football scene yesterday, and the news yesterday was that the Big Ten and the Pac-12 was going to cancel their football season for the fall and maybe try to play in the spring. Contrary to that, the Pac-12, which is the schools in Kansas, 3 schools in Texas, Texas Tech, Baylor, University of Texas, a couple schools in Oklahoma, University of Oklahoma, Oklahoma State. I don't want to slight anyone's school here. I'm not going to be able to name them all. Kansas, Kansas State, Iowa State, and I'm sure there's a couple of others. But the Pac-12 said they're going to play football this fall. So that leaves, of the what they call the Big 5 power conferences, that are the conferences that most of the big major bowl bids go to. John, I'll get to that in a minute. Rosengren did talk. He was cautious on the economy, and I'll get to that in just a minute. But the Pac-12 said they're going to play. So that pretty much leaves the ACC and the Southeast Conference. I would bet that the Southeast Conference is going to say that they're going to play. You're talking Alabama, Auburn, Kentucky, Florida, Georgia, LSU, et cetera, this is the conference that's in addition to a couple of other schools once in a while, that's the conference that's really dominated the big championship bowl games for probably the last 8 to 10 years. But we'll see. They haven't said it yet. But my bet would be that the SEC is going to say they're going to play, and then we have to see what the ACC says. And just keep in mind that Clemson's in the ACC, and so is Florida State. So the Carolinas, a couple of other schools. So that college football is a big part of the economy in any area where you have major conference schools, from the travel of the fans to 100,000. Whether or not the Pac-12 is going to play in front of fans, they didn't get into that. They just said they're going to play. John is asking a question here. Did Rosengren say anything of significance today? He said he was a little bit. Rosengren is the president of the Boston Fed, and he said he was a little bit concerned that the economy is a little bit slow to get to that next level, kind of what we've talked about a little bit, of expansion. And he thinks, probably unless, schools reopen. I don't know if he was talking about the economy specifically in in the New England area or the economy nationally, but he just said that basically, look, we've made some progress. Everybody's seen the numbers for May and June and July. It's going to be challenging to get to that next level. So I think a lot of the Fed people are always going to err on the side of caution. I know that Neil Kashkari, the president of he's a different Fed chairman because he doesn't really have a Fed background, although he has a financial background, sort of. He said that he thinks the whole country should be shut down, lock, stock, and barrel for 6 weeks, and that'll beat the virus. I don't think there's any way in the world it's going to happen. I don't really know what kind of a point he's trying to make by saying that. Powell has said the whole key to getting the economy to that next level is to beat the virus. It's hard to disagree with that. So, yeah, Rosengren made a couple of comments. I was watching the market pretty closely while those comments were going on. It might have paused a little bit, but he certainly didn't put. It wasn't one of these things where somebody from the Fed has said something and the market has just given up half of its gains on the day, and now it's waffling a little bit. It really just didn't put a dent in it, in the rally. Now, that being said, as I said at the beginning, the first 10, 15 minutes of the show, there were a few things about the rally that I was not totally thrilled with today. But look, if Asian markets have a little bit of a positive tilt to them overnight, and if markets in Europe, I think the FTSE, bear with me a second here, FTSE was up 2% today. I think it was up 1.5% yesterday. I think that a lot of people feel that, and not, so that's the UK. The CAC and the CAC is the French market. The DAX is the German market. Those are the two big markets on the continent. They were up today. They were probably each up 1.5% the day before. UK GDP came out clearly. I mean, it was down double digits for the second quarter, but maybe it wasn't down as much as some people had feared because the UK market had a pretty good day. A lot of people feel that the EU is through the worst of this. And keep in mind that the worst of the virus in Europe, primarily Italy, but it also hit pockets of Germany hard. It hit pockets of other parts of Europe hard. It hit areas in France hard. That happened maybe about 2 to 3 weeks before it hit us hard. So if they're now through it, if they're really on the backside of it, where we were on the backside and then we had a bunch of big outbreaks in high population areas, we should start to see significant declines in cases. We've already seen it a little bit. If we see more of that, more declines, that would be helpful. I think the market feels like Europe is kind of through the worst of it, and the market acting as well as it is, especially for stocks that aren't necessarily benefiting from the virus shutdown, that the market's looking forward. There's no doubt about it. It always does. And it's looking out, into September and beyond, regardless of, what we're seeing exactly right now. John's got a pretty good question here. Isn't the cheaper dollar beneficial in this current environment, especially if we're trying to restore our manufacturing and medicine. Yes, a cheaper dollar to an extent, unless it gets ridiculously cheap, is definitely positive for U.S. asset values. It makes foreign investments here a lot more attractive. It makes capital flows here a lot more likely. And I did see a report today from a leading economist who's been tracing it very closely that um, she has documented at least 100 U.S. companies that have moved their supply lines from China to the US. That does not include Japanese companies or other companies that have moved their supply lines from China back to their country or to Japan or to other countries in Asia. Okay. So now this could be t shirt manufacturers, it could be clothing manufacturers. Clearly, it's not really big manufacturing items yet because you can't just move those supply lines in a matter of months. But she has documented 100 companies. I'll tell you who it was. It was Nancy Lazar. She runs Cornerstone Macro, which is a economic boutique firm. She's a very accomplished macro economist. She worked with Ed Hyman, who was the number one rated Wall Street economist for 35 years. She was his right hand person for 20 years. And she left and started her own firm. Uh, she has very sophisticated models. She's extremely highly regarded among very senior investment professionals around the globe, not just this country. And she says she's pinpointed 100 companies in the U.S. that have moved their supply lines from China back to the U.S. That doesn't include companies that have moved their supply lines out of China into other countries. So, a little bit of an offshoot from your question about the cheaper dollar, John. Clearly, a cheaper dollar, although it has been a big part, allegedly, of the rally in gold, it certainly didn't put much support to the sell off in gold that we had the last 2 days. Very sharp sell off 2 days ago, down over $100, down about $15 to $20 today. And yes, the euro was strong, the pound was strong, the yen was strong, so the dollar was weak. Yes, Rick, she's right up there at the top. I'm not gonna, look. I think Ed Hyman is the best of the best. She was his right hand person for 25 years. She's tremendous. And she's pretty, she's positive on the rest of the year. She's not wildly exuberant. It's going to take a lot of work, but she thinks we're heading in the right direction. So the cheaper dollar will helps our stock market, potentially helps foreign investment in the U.S. to a point, until the dollar gets so cheap that people say it displays a lack of confidence in our whole economic, system, et cetera, et cetera, et cetera. So see if we get other things here. Look, okay, so tomorrow, I don't have a tremendous amount else. You know what? Crude oil, I didn't touch on crude oil, had a nice day today. It was up over 2%, 42.56. A number of comments from a number of people today about commodities doing very well. They weren't just talking about crude oil, they were talking about lumber prices at an all-time high. The home building market is just still on fire. Now, some of those stocks have had just monstrous moves. Article in the journal very early in the week that the home building subsector is at its highest level in 15 years. Of course, as soon as that article comes out, those stocks pull back for a couple days. But lumber prices up, copper prices up, not crazy like silver, but copper's not a precious metal, it's a industrial metal. But clearly, if the construction business and the home building market's going to continue to improve, that will help copper. um so where else are we? I don't. Oh, one um, very significant person left us today. Sumner Redstone was a media icon for decades. Ran Viacom, ran a couple companies before that morphed into Viacom. He checked out today at 97. Unbelievable life story, Sumner Redstone. So tomorrow morning at 8:30, we will get Illinois. Thank you so much for the question. That's a great question. Tomorrow morning, we're going to get the weekly jobless claims number at 8:30. And we had a decent drop in that last week. It'll be very interesting to see if we have any momentum from last week, it going down from like 1,400,000 down to 1,200,000, continuing claims down. And Eleanor has a great question here. Any thoughts on stock splits? Apple, now Tesla. Look, I am a big favor of stock splits. Apple split their stock 4-for-1. Tesla announced a 5-for-1 stock split. A lot of the purists will tell you that there's absolutely no fundamental reason for companies to split their stock. I think that although that's true on a valuation basis, I think having a lot of stocks at 1,500, 2,000, 2,500, Apple was about it. Apple stock split hasn't become effective. It will at the end of the month. Look at what Tesla did today. Tesla was up 12%. Okay, now I don't know that that's because they said they're splitting their stock. They're going to split it 5-for-1. So if it was 1,500, it's going to be a $300 stock. I just think that it puts 5 times as many shares out there. It makes the stock a lot more liquid. It's a lot easier for institutions to trade $300 stocks than $1,500 stocks. The only reason institutions might not like it is because if they're going to sell $1 billion worth of stock on a certain big company that they own, that means they got to sell that much more volume. That means maybe they got to pay that much more commission. I think that's very small thinking. If you're a big institution, you want markets to be liquid and tight. And with $1,500 and $2,000 stocks, I don't care how many shares are outstanding, you're not going to have markets that are as liquid and tight as they should be. If these companies would split their stock, there's way too many stocks that trade. I mean, I'm going to say above 400. Companies used to always split their stock when they'd get to 400 or even when they'd get to 300 or 200. Now, I think that one of the reasons they haven't is that it used to be if you'd buy less than 100 shares, those orders went through, and 100 shares was an odd lot. So to buy 100 shares of Tesla, if you're a retail person at $1,500 is a lot of money. I'm not going to do maybe Rick will do the math for us. What's that? Maybe is it $1.5 million? A lot of retail people are not going to buy 100 shares of Tesla. But to buy 1 share, 2 shares, and not have to pay a premium because it's going through an odd lot facilitation function, anything less than 100 shares in the old days used to be an odd lot. And I say the old days, I mean more than 10 years ago. So if you're buying 40 shares of Apple or 40 shares of Tesla or 3 shares, it's going through an odd lot function. And you don't pay, you're paying the same ticket charge. You're paying the same amount that you would pay if you bought 1,000 shares of it or 200 shares of it. But that's not the point. The point is have 5 times as many shares outstanding. Your market cap is the same. It doesn't affect your valuation, but your stock will be so much more fluid and so much less volatility in your stock, even on a percentage of the market price. I realize a $300 stock's not going to have as much volatility as a $1,500 stock, but I'm talking the fact that if you have 5 times as many shares outstanding, the market's just going to be so much more stable when big institutions come in to execute large orders in the stock. It's so much easier to operate with a lower price stock than a higher price stock. So, Eleanor, that is a great question. Look, I know that Warren Buffett is never going to split Berkshire Hathaway. Okay. It trades at what, $300,000 a share or something like that. But, and I know that the investment bankers that he deals with, because I worked for one of them for a while, Solomon Brothers, they had to spend, they spent 2 years begging him to issue a B class share that would trade at a hundredth of the price of the A class share, so that the stock would be more manageable than like 1 and 2 shares of Berkshire Hathaway trading at a time when the stock's trading at 300,000 shares of stock. So Warren's never going to trade Berkshire A. He's never going to split Berkshire A. Look, at some point he's 87 years old. Charlie Munger's, I don't know, 93, 95. When those guys leave us, is somebody else maybe going to split that stock? I don't know. He might put it in his, so he might put it in the bylaw or in his will that it can't be split. But I'm a big fan of, I think Amazon should split their stock. I think Spotify should split, or Shopify should split their stock, whichever one it is that trades at $1,000. I think all these companies that trade in 4 digits or high 3 digits should split their stock. It just makes the way the stock trades so much less whippy and volatile, especially for when institutions come in to, execute sizable orders. Rick's got a question here. Is there a good indicator to observe sentiment in the bond market? Well, there probably is. Are there any bears anywhere? No, not really. The yields. Okay, so a week and a half ago, the bonds, the 10-year note, well, that's the benchmark now, was yielding 0.52-ish%. The low water mark was on one of the real extreme panic days in March when it got to 0.4%, and the 30-year got, I think, below 1, probably traded 0.85. I didn't like that. I don't like to see that kind of panic in the market. That corrected itself pretty quickly. So we've creeped up over the last 10 days from 0.52% to 0.65%. I did not check what it did today. I like the fact that we're back up above 0.6. I would like to see the yield on the 10-year even get a little bit higher. I'd like to see it up to 0.8, just because I think it's more normal and more healthy. And certainly the financials would love it. Okay? Not that I'm trying to give any more easy money to the banks. The banks are much more regulated than they were 10 years ago before Dodd-Frank. But, and they like a steeper yield curve, obviously. That's just basic math. But the fact that the yields have gone from just above 0.5 or 0.5% to up to 0.65% shows that people feel that the economy is getting stronger. Okay. Now, it would be nice to see a sharp drop in the weekly claims number tomorrow. It would be nice to see a drop in the continuing claims number. It would be nice to see good retail sales number. on Friday. It would be nice to see a little bit of a bump in industrial production capacity utilization on Friday. That would show more 0.8, 0.68. Okay, well, I like that. I mean, I just think I think it's healthy, and I think it shows that the economy, um, people feel, bond investors feel that even though the Fed is there buying bonds consistently, okay, and will be for quite a while, to have the yield go from 0.5253 to 0.68 shows that people feel that the economy has a little bit more legs to it than maybe they thought 2 weeks ago, 3 weeks ago. And another thing about the yields going up in the bond market, that will give some support to the dollar, because capital flows around the globe are going to go to where the interest rates are the highest. Okay, that's why the dollar has been uh, um, kind of the reserve currency for the world, and with rates in Europe, some of them negative, some of them just barely positive. Japan at zero for many years now. Uh, that's why the dollar's been so strong for so long. Now, 0.68 is still very historically wildly low. Uh, we had a CPI number today. If you want to be picky, it showed a little bit of inflation, um, maybe in some food items. But there's certainly no inflation in. It's probably there's inflation in real estate, but that's a function of whether you're in the suburbs or in the city, because real estate in the cities are going down and in the suburbs going up. So that's a little bit skewed geographically and even at a micro level. But I like the fact that the yields and I don't think it's a coincidence that the yields on the 10-year have gone from the low just above 5.5 to 0.68 over the last 2 weeks. And the stock market has had a really good run. So UST is a safe haven in the world. Yes, yes, it is. John, there's no doubt about that. I'm going to kind of leave it at there. It's 7:40. I really appreciate all the support. I like to see all the people in the chat. And if you have not subscribed yet, please hit the subscribe button on YouTube. If you want notifications on the next show, Maddie, thank you so much for all your support. You and Jen and Athene, you gals are great. And I know there's more of you. I'm sure McLiberty's in there somewhere too that aren't necessarily in the chat that are watching. I really appreciate the support. If you hit the subscribe button, tell your friends, any of them that might be interested. It's a great show. We try to keep it short. And this is my YouTube channel. On Periscope, it's TJ Anderson 12. My Twitter handle is TJ Anderson 1. And everyone have a nice evening and enjoy the rest of the week. We will most likely talk to you tomorrow. Good night, everyone.